All right, guys. I said in the previous video that the break in market structure kind of tells us where the market is going. So if you have not watched the first video, do well to watch it. Market structure 101 and market structure 102. It will give you an idea on what you're going to be doing. So today we'll be talking about making entries based on market structure, making entries based on market structure. I want to point out something that every time frame has a unique structure. Every time frame has a unique structure. It may be bullish on the daily and bearish on the 1 hour. It may be bullish on the 15 minutes and bearish on the 30 minutes. So for you to maximize your trading, you have to wait for the smaller time frame to align with the bigger one, and then you make your entries. For instance, you can see that crash 500 has been bearish for a while, made a lower high here, made a lower high, a lower high, a lower high, a lower high, and then there was a break of structure here, but still it still came back down. Still came back down, the broke structure here because it crossed this lower high, but then it still went to this point and still fell back down. It formed something like a double top. This is a reversal pattern, this is a double top. From the top here, and then went down. For you to make entries in this kind of market, you have determined that yes, the market is bearish on the daily time frame. What do? You come to a smaller time frame to see what is happening. You come to a smaller time frame to see what is actually happening for you to make your precise entries. Because if you want to use the daily to make your entries, you have to use a very large stop loss, and that may not be good for you at all. That may not be good for you. Now, based on this is 1 hour. This is the smallest 1 hour. This is 1 hour. I'm going to teach you how to make entries. Oh, this 1 minute, sorry. 1 hour. Okay. Okay. Based on the 1 hour time frame, if we wanted to based on the 1 hour time frame, if we wanted to catch this trade, we have to wait for a break of structure to happen on the smaller time frame. For instance, let me move this auto. For instance, we have realized that the market is bearish from the daily. So on 1 hour, you're just looking for entries. You want to see some kind of break of structure or retracement on the 1 hour. This has been a very long sell. Has been a very long sell. Okay, based on the 1 hour time frame, we have known that the daily time frame is bearish. So now we're looking for entries. What do? You could use the 1 hour time frame. You see the markets going up, forming some kind of low, a high, a low, a high, a low, a high, a low, and something like this. But look at what happened there. The market broke structure somewhere around here. This was some kind of break of structure. Can you see it? This is how to make your entries. This was a break of structure. And then the market broke structure right here. It came down, did a retest, came down, then came up to this point to test this other block somewhere around here. So for you to make your entries based on this, there are two likely places I would have made my entry based on market structure. I would have made my entry either here, so I would have made my entry either here or here, because this was the last low, and you can see the market broke structure right here, came to retest, then came down. This place could not hold it. It had to go back up because of there was some kind of level here. If you check this point, there was some kind of level around here, some kind of support here, which sends price back up. You know that the market has broken structure here. So now you're looking for only sell opportunities, no more buys. It's a broke structure here, came to retest it, touched here, then went back to this other block. This other block that this is the other block that broke structure. It came up here, and then this is where the sell started. If you had taken your trade here with your stop loss maybe around the price wouldn't have gotten here at all. It just came to touch this same point again. Let's extend this. Let's extend this. Markets came to touch this same point again and then went up. So it has been like that, and then finally broke this level. It finally broke this level and gave this sweet sell. So those people that are waiting for a conservative entry, they would have waited for this level to break, because as you can see that there have been so many rejections on this level, because this is a kind of strong support. So if you wanted to be conservative with this trade, you would have either taken your trade at the top around here, because this has proven to be a strong level. You have taken a trade around here or waited for this point to break. So as you can see, immediately this point broke, look at the break here, it broke, came to retest. Have you seen it? Came to retest here and then it fell massively. So what is the idea of this? We know that the market has been bearish from the daily time frame. So we're looking for a sell opportunity. So we saw a break of structure somewhere around here. So the market break down. We know that it was going to sell. So it was just a matter of waiting for a good entry. The market retraced, came up here. This would have given us an entry, but it seems that this place was not strong enough to hold price. So it went to the next other block, and then it came all the way down. If you took this sell, this is about 9779. This was about 200 pips. About 200 pips. If you took this trade just from here to here, about 200 pips. That's a very good trade. Let us check the risk, the reward. So if I took my trade and placed my stops somewhere around here, I took my trade here, my targets would have been down to this support to avoid problems, and my risk would have been okay, my risk would have been 1:8. My risk, sorry, 1:6. So I've been risking just a little, maybe let us say, to be safe, I put my stop loss above this place, this candle, but I've been risking 1 to make 4.47. That's a very good trade setup. It was a very good trade setup. Okay. So we still remember the market is bearish. It came in, you have not taken your first profits here. One price came up here again, take another sell, take a profit somewhere around there too. So this would have been the best entry, since this place has been rejecting price. They waited for this place to break and then you take your sell. Let's look at another example of a break of structure, and then let's use something like V100. Okay, no, this is V100 to check. Let's use 100s. Though I don't trade 100s, but let me just see what is happening. Let's see what's happening there. Let me use the daily time frame to know what's happening overall. I'm showing you how to make entries based on break of market structure. Right. From the daily time frame, we can see that this market it was forming lower highs, lower high, lower high, something like a lower high around year. Something like a lower high here, came down, and then there was a break of structure. There was a break of structure somewhere around here. Somewhere around here. This was like the last lower high. Somewhere around there. There was something like a break of market structure. It broke the range here. So in this market, I'll be looking to buy. I'll be looking to buy this market. I'm looking to buy this market because there's been a break of structure for a buy. Now, if I saw this break of structure, I would have come to my smaller time frame, maybe the 4 hour, to give me that good entry. Remember that you take your buys at a higher low when there's a break of structure for a buy. So we saw a break of structure. Okay. This is the 8 hour. So this time frame is too large. Okay, so using the 8 hour, there was some kind of level somewhere around here. Some kind of level around here. If you draw your resistance, there was some kind of level here. No, somewhere around here. There was some kind of level there. Check, you can see the rejections from this point. There's some kind of support there. You can see the market pushed heavily from here. Markets came here and started selling, see the retest. So there was some kind of level there. You remember the market is bullish for now. So we saw price break structure here, came to form that higher low. So if I saw this, I'd have taken my buy here because one, you see how price has been reacting at this point. So this is a clear higher low, and look what happened. It shot up. Now this market formed a higher high, a higher low, some kind of double top, and this was a new break of structure. This is a new break of structure. So most likely this market is going to sell down. So let's use our 1 hour to see what's happening there. This is our 1 hour to see what's happening. Okay. We realize the market broke structure. The market broke structure. This was the higher low we're looking at. It came and broke structure by closing below this point. Now we are seeing some kind of this. I'm expecting price to retrace up a bit, maybe to somewhere around here. We have to wait for price to form that new lower high. Once price will form a new lower high, so most likely we may see price come all the way to here, somewhere around there, then sell properly. This is some kind of consolidation. This is some kind of consolidation. What you see here, this is a consolidation, and we are not interested in trading that. So we wait for price to retrace and give us that new lower high, and then we take price down because there's a break of structure somewhere around there. Somewhere around there, there was a break of structure. This was the obvious low that took price up. So the market has closed below here. So this market is bearish for now. So that is it about the lower time frame. Remember what I said, that you must learn how to merge distance. You must learn how to merge distance. If you have a question, you can do well to type in the comments box or contact us on our email. Yeah, on our email. This is our email. electron.global.com. So this is our email. Can do well to reach us on our email. Please don't forget to like and subscribe to our channel to get more info like this. Also, if you're interested in our tutorship sessions, do well to contact this email, or you contact this phone number. Contact this phone number. We offer tutorship for people that are totally new to Forex, or that lack the basic foundational knowledge of trading Forex. We will guide you on the things you need to know. You know that not every information is needed in this journey. You don't need to go and start reading everything. What we do is that we break it down and tell you what you should read and what you should not read. So you can contact our email or our phone number. The price for that training, for just the beginner course, it goes just for it goes for just 25 Sorry. It goes for just $25 for beginners course. Then we charge $70 for the master course. Then if you want the both of them, both cost $60. Yeah. So if you just want the beginner's course, maybe you lack the basic foundational knowledge on trading, you can just hit my email or my phone number. It's available on WhatsApp. The beginner's course is just $25. Then the master course, it costs $70. But if you want to do both of them, you just take it for $60. Instead of paying separately, you can just pay $60 and you get this. And under this, you will get 1 year mentorship. You're free, you have access to me for a full year. If you pay for the master course, you have access to me for a full year and everything. So you have access to me for a full year. You have access to me for a full year. One year access to me. You will learn everything that you need to learn in the trading journey. I will help you to filter trades. I will teach you stuff like divergence, multi-time frame analysis, candlestick patterns, and profitable setups, smart money concepts, harmonics, and all of that. But if you're new to Forex, I recommend that you take just the beginner's course for now. But if you still have the money, you can just pay $60. So you know that you're saving $25. If you want to pay separately, you'll be paying a total of $95. But if you're paying for both of them at once, it costs $60. So, but I recommend that if you're new to Forex, Forex is not for everybody. So I recommend you just pay for the beginner's course. It's recommended you pay for the beginner's course. It's recommended that you pay for the beginner's course at first. So we can teach you the things that you need to know. All those stuff you need to know that will help you in your trading journey. We'll teach you how to analyze trades, how to draw your resistance and support, how to do all those kind of stuff. So more details about this will be in the description of the video. I'll put more of this in the description of the video. So in our next class, we'll be talking about support and resistance. We are done with market structure 101. So talking next on support and resistance. Talk about supports and resistance. Support and resistance. That'll be our next class. We're talking about this. All right. Now, there's something I did not mention. When you pay for the beginner's course, I will bring up some things, some filters to help you make better entries. I'm teaching you how to use your Fibonacci tool to make entries. I'll teach you how to use your divergence tools. I'll tell you how to use some indicators that help you to know when the market is exhausted. So all these things will be covered in the beginner's course. Everything you need to know about analyzing the markets will be covered in our beginner's course, while the master course is the advanced. We'll be teaching stuffs like divergence. We'll teach you smart money concepts. We'll teach you institutional trading. We'll teach you mitigation. We'll teach you harmonics and all of that. So if you are interested, just do well to contact my email or my phone number and register. God bless you. Please feel free to ask your questions. Cheers and God.